Welcome to another exciting episode of The Trading Bell. Today on the program, we have a special guest, and that is the Group CEO of KCB, Joshua Oigara. Joshua Oigara will be talking to us about the bank's next move following the acquisition of National Bank of Kenya. What does this mean for the banking sector as well as to the customers and shareholders at the end of the day? But before we get into the interview, let's take a quick look at Joshua's profile.
Joshua Oigara, CBS, is a member of the KCB Group PLC and KCB Bank Kenya boards, as well as the KCB Group Chief Executive Officer and Managing Director. He is the chairman of the Energy and Regulatory Commission of Kenya, a director of the Vision 2030 Delivery Board, and he was commended by His Excellency President Uhuru Kenyatta on the award of Chief of the Order of the Burning Spear, CBS, for exemplary service to the people and nation of Kenya. He is also the chairman, Kenya Bankers Association, the banking industry lobby. Listed as one of Africa's top 25 leaders to watch based on his role to champion transformational leadership and change on the continent by the Financial Times, Joshua actively engages at national and industry levels to drive this agenda. Joshua was named among the top 100 youngest and most influential economic leaders in Africa. He was recently named CEO of the Year in East Africa by The Banker Africa and captains the largest indigenous bank in the East African region with assets of over $6.5 billion and a market capitalization of over $1.4 billion.
Thank you, Joshua, for making time for us today.
Thank you, Abby, for hosting me.
All right, Joshua, historic day for the exchange and also for KCB, where we're seeing the listing of shares actually for following the acquisition of National Bank of Kenya. And there's a lot of hype around this. And perhaps why is the excitement really?
Well, because first we are coming to the exchange to raise money.
Sure.
Yeah, I mean, there are many people saying, can I really go to the Nairobi Securities Exchange to raise capital to be able to expand my business? And we are saying in this morning that it is the place to go for listed entities, it's the place to go for new entities that wants to come into the market. And lastly, that we are able to do the transaction in a short period of time. So that is the excitement. Now we are listing today 142.9 million shares of market value of over 6 billion. Yeah, that is, and we've raised that money in the exchange. That for me is the excitement we face today in our market.
Of course, interesting times for the banking sector. And Joshua, for the customers and of course for the shareholders across the board, what does this mean really when you look at the big picture?
So I would say there's like many beneficiaries. If I pick the most critical ones today, is the customers of the National Bank and the bigger KCB group. Because before, they were not getting enough access to capital, so liquidity was a challenge because we didn't have enough capital. Number two, in terms of investment in new technology and systems, that has dragged behind. And number three, there was always this kind of fear, what's going to happen with my bank? Is it going to exist or not to exist? And the banks have, customers have a very long relationship with their banks for a long time. It's proven in our market. If you look at the data which was done by the FSD, the Financial Deepening Department today, you find that customers actually stay on quite longer for their institutions. And number two is the shareholders. NBK had 54,000 shareholders who had kind of been locked in a stock that they want to exit because the market value had been coming down very dramatically.
Sure.
Remember at one time NBK was valued a share at almost 10 shillings. By the time we did this transaction, the share price when NBK was 3 shillings and maybe 25 or 30 cents. So that contraction of value wasn't a real, the bank never lost the assets. Yeah. So I would say that there was a delta adjustment, which was not based on a market valuation. And then lastly, the entire banking industry. So this is the 10th transaction in the financial sector, which is a consolidation. And it is the largest transaction today. So we've been seeing that over time, markets are getting consolidated, customers are getting fewer choices, but banks are becoming stronger. And stronger banks are good, not just for our customers and shareholders and community, but they're good for the country and they're good for economic development.
All right. And Joshua, you've touted this takeover as a friendly takeover. Of course, we've seen in other jurisdictions where there are hostile takeovers.
Correct.
And from your experience, of course, being the big brother in the banking sector, of course also handling matters to do with other banks that were in distress. For KCB, what vibrancy does this bring to the brand KCB and of course the roadmap in terms of growing the bank and growing the financial sector at large?
It's very exciting for us. So first, we are the only bank with 2 banking licenses in the market. So it tells you, you asked me about friendly takeover, is our history.
Yeah.
Remember that we are not always the big brother. Our history shows that we also at one time had difficulties. We've grown to become the largest institution. So what I will say that we see 2 main distinct value of this acquisition. We are very much aligned on our customer profile. So if you look at our customers in the energy sector, manufacturing sector, and other people like in real estate, construction, oil and gas, we are very much aligned between KCB and NBK and also a couple of other banks. And number 2, in terms of our retail side, we are a big bank that actually has customers from government, both national government and county governments and what you call the departments and agencies. So that we're very good at. We run that model. We are a big collector of taxes on behalf of the Kenya Revenue Authority, and we worked that very closely for many years. So what we'll do is to strengthen, so go for more market share. So that is the other excitement. So we have, the 2 banks today have a market share of 20%. Our real ambition is to increase that market share by 500 basis points in 3 years. That's a real ambition. Market shares in our markets don't change that much. And then lastly is to make sure that because NBK gets capitalized, we have a new brand. There's nothing as exciting like us as KCB owning a very strong brand with a lot of heritage as NBK. So it's a co-creation that we can have 2 strong institutions available. I mean, the capital adequacy issue will be fixed because we'll invest in this organization. Then we can now scale up opportunities for growth. We want to go into small and medium enterprises as a catalyst for growth. We are able to provide funding. If we want to the digital lending space through mobile and payments, we are able to provide a solution for itself. What we may also do is to consolidate the back-end systems of the 2 banks to make it seamless, a one-stop shop. But we are not asking our customers to change their account numbers. We are not asking our customers to be able to come to the bank and get their documentation done. We are not asking them to change a new system. So in many ways, our customers are taking off. So what we were doing was enabling scaling. So if I asked to me, what will a customer of NBK do tomorrow? Go to your branch, get your relationship manager, ask for your requirements, get support, reach them on their social media, call them, WhatsApp them, you will get the feedback from the bank.
All right. And Joshua, what will this entail, especially to the ordinary customer sitting down in northern Kenya who is wondering, will KCB rebrand this bank? Will we see a bit of branding happening? At the same time, the same customers also keen to know what plethora of products should they expect now that they're seeing KCB coming in with a stronger financial muscle, or should I say a capital base that is quite enormous?
So if I look at our customers, so we continue to run 2 products. So we have got the normal conventional banking product that we operate under NBK and also KCB. And also we have an Islamic window, what we call a Sharia compliant window, which we operate under NBK, what we call Amana, or KCB, we call it Sahal banking. Now those 2 will continue, and a number of our customers, whether they're in Nairobi or they're in Garissa, Mandera, Wajir, they're Turkana, they're Lokchogio, all that, those customers, even all the way going down into Mombasa, Lamu, you will find Garsen, you'll find that there's a lot of activities in terms of this. So we are not rebranding. Yeah. Well, you may see a new coat of paint, but that is just making sure that the colors for NBK are visible. KCB colors will remain. The branches will remain. So there is optimization of the branches that we will have. NBK has got nearly 80 branches, but the ones which are really operational today are 70. And we have got 200 branches. So in a way, we like to optimize where we can see the best value. But this is what I say to the customers of NBK. As long as they're able to come and support their bank, come in and get the trade services, get all the opportunities they need from the institution in terms of the lending product, account opening, their deposits, the branch will continue to remain. So we are not today in a crisis of shutting down the branches for NBK or KCB. That's not the ambition. So for my customers who are sitting in northern part of Kenya or anywhere, I will say visit your branch. Yeah, it's much more vigorated. It has got the capital it needs. The services will come back that were not there before. So we will keep the best of both institutions.
Okay.
So you're asking me about new products. So we are very strong on the digital, especially on mobile.
Yeah.
Agency banking we have, our merchant business that we have, our lending products which we'll have. So that will continue to build. Our own social investment program like Tujiajiri will extend into what we are doing in NBK today. And I see this as the best of both worlds. It's perhaps one of the most historic transactions in the financial sector, and perhaps that is why it was done in a very short period of time.
Okay. And Joshua, allow me to pick your mind as well. Now that we are having this takeover, of course, we anticipate there'll be a bit of shakeups in terms of the boards. And perhaps if you could give us some insight. I recently saw you appointed a new MD to lead NBK. And of course, what is in the pipeline, especially when it comes to having key human resource to champion this next phase of the bank?
Yeah, so that's very correct. So we've appointed one of our most experienced senior management member, Paul Russo, as a new managing director for National Bank. And this I would say is a natural process, because once you have got a new team that is running the bank with a greater vision, changes in management are generally inevitable. But we have also given the former managing director, called William Musau, a responsibility within KCB in terms of being able to support the integration.
Yeah.
So we are keeping both worlds. But your specific questions around what will you do with the management team? So I speak to all my staff, and we have almost 1,200 to 1,300 staff today in NBK. And we have almost 8,000 staff at KCB today on all our businesses. So those that have continuously worked hard, delivered on their objectives, all their staffs will keep their job. Yeah? And that's what I've seen from my few interactions with themselves.
Yeah.
So a new management team with KCB under NBK will largely be the people that have been running NBK. So I will not say that there will be a revolution. There will be few new ones. I see that they have roles which have not been filled today, so they have some what I call vacancies, and those will be filled up sometime between now and December. The only thing we are waiting for now is a new board. So it's true, we said we are reorganizing the board of NBK. So the chairman, who has served NBK for 10 years, has expressed to retire. And I'm very much grateful and indebted to Mohammed Hassan. I've known him for many years. And so we will have a new chairperson, we'll have a new board. We're expecting approval from the central bank this month of October. So when that is unveiled, you then have a new team. So Paul will run, it's a team of, I say, 10 senior leaders. Most of them will actually be the ones that will be running NBK. But the performance for our staff is what will determine, like anywhere else, whether you remain in the organization of NBK. You get me? So I mean, there's a big concern that as people are going to leave. So I want to encourage my staff. The fear that they are going to lose their job is unfounded.
Okay.
Yeah. If they are delivering their work, and I mean, so now we are looking at the performance when NBK and said, I've got my goals and priorities for the year. What I should be doing is chasing my effort to delivering them.
Okay.
And that's what gives you the job, nothing else.
Joshua, let me also take you now to another facet of this conversation. When you look at NBK, it was also a bank that had toxic loans.
True.
When you began the process. What will happen to this? Loans that you're inheriting? And of course, knowing pretty well that a good chunk of the banking sector right now is having a bit of a tightening of liquidity, especially when you look at the interest rate cap, as well as a few other fundamentals when it comes to the non-performing loans.
Okay, correct.
Yeah.
Correct. Let me say that it's, you call it toxic. Let me say that it's not all loans in the industry, and I give you a picture of the industry because I also serve as a chairman of the governing council for the Kenya Bankers Association.
Sure.
So our non-performing loans are around 12%. Industry loans, overall loans, are just almost 2.6 trillion. So 12% is quite a big number, right? And the gap for ourselves is to identify which sectors we face problems. So 3 problems have arisen. Government has not paid its contractors on time for a while, and you know that's a challenge. And it's both national and county governments. Now, county governments affect a lot of the small and medium enterprises.
Yeah.
And you can see that this is the work that needs to be done to make payments happen. We have had challenges on the real estate, projects and houses and office blocks, office apartments, office buildings. We've got areas on manufacturing where we had difficulties before, and finally we had challenges in agriculture. Yeah. So whether you see sugar industry, and some areas of manufacturing as well. So NBK, as like any other bank, has a fair share of its loan book where the customers are not performed. So I would like to say that it is few customers who have actually not paid. And therefore it's not a systemic problem in the whole organization.
Okay.
Our experience is to recover those loans. So if I look at our plan this year, we have a special assets team which is very much knowledgeable with capacity to be able to go after those loans, have a restructure, have conversation with the owners. So that's what we will do in NBK. And I am confident that next year we should have our quality of our loan book much down. So if I look at both sides, I think this is the worst. So we've kind of come to the worst. So the worst NPL level for NBK today at almost 50% is the worst we have. We should expect to bring it down to 20% by next year. And the year after, our target is actually 8%. Okay. So it's quite a dramatic reduction or a huge upside on recovery.
All right.
We see that opportunity in the institution. So it's not all customers, it's very few customers. I always say that when you say it's toxic, it means that you have systematic, isn't it? And it's prevalent.
Yes.
This is a case where you have got few customers. Unfortunately, they have a bigger size of loan they have taken. So again, a good example. If one of your customers is 10 billion and your asset book is 100 billion, their in is 10% NPL. It's just one. Yet the bank has 600,000 customers. Now one cannot be toxic. But I must admit with you that it is one of our greatest challenges in acquiring National Bank is that we have to put in mechanisms, plans to be able to resolve the recovery of those loans and bring them back to performance. That for me would be what I would say is an important aspect. So I'm excited both ways. And also writing new books, giving new loans, getting new customers. NBK's 1 million customers, of which 600,000 are very active. How do we double it in the next 1 year? And it's important to have a different lens. That to build a stronger economy and have a stronger financial sector, banks need to be able to work in more collaborations and they build common synergy for the basis of lifting our economy. It's very important. It's about scaling and lifting others up, which is why we went for NBK. Now, there are many people who will say, but why don't you leave the bank to fail? We're a small economy. If you let the little businesses you have to collapse, what about the future of our economy? What about the future opportunity for our young people? We need to be leaders that leapfrog opportunities. This, for me, is absolutely critical for leaders of enterprise today in our market.
Amazing. And Joshua, as we come to the conclusion, I wouldn't end the interview without just getting your perspective around regional expansion. I know you've been knocking the doors of Abiy Ahmed in Ethiopia.
Correct.
And perhaps how is the strategy around venturing into new markets, especially now that the other day I was having a conversation with Shilambi Jiwe, the Deputy Governor, and she was very optimistic, saying that we are seeing a good number of African banks now becoming Pan-African. And I remember her sharing an example of saying right now we have over 10 banks having a presence across the continent.
Correct.
And this in the next 10 years should actually grow, if not exceed the targets that banks have.
Correct. I mean, it's valuable you're getting the feedback from the central bank. So Kenyans naturally are very entrepreneurial, correct? And so if you look at the continent, the banks or the businesses which have expanded are largely from Kenya, from South Africa, from Nigeria. That's really what has happened. And there are a few from Egypt, but mostly, and now we're seeing more and more from Mauritius. But you have more banks from Kenya that are in the region than anywhere else in the continent. But
are we getting value for money?
Now, this is a very important question. So, and it depends on what strategy and what business plan we are engaging in terms of growing our size of our business. So these are the two main areas that we need to put in place. And we have to be very deliberate in the way we choose our strategy and be very consistent in deploying that strategy across the market. So it's not the same. I say it's not a win-win for every plan. So in Ethiopia, it's a market that remains closed today to foreign institutions. So we set up a rep office in Ethiopia a couple of years ago in 2014. And it's now, this is the 5th year. So we still don't get the right to have a banking license. We don't collect deposits. But over time, we are able to understand how the market operates. Yeah, it's not Kenya. The Democratic Republic of Ethiopia is a different economy in terms of the regulations. And so I would say that we already have one of your feet inside the market, literally speaking, so that when the market opens up, so we may see more of a joint venture and partnership with some of the banks through our digital business arm. So remember, we have a very strong catalyst business called Vuma today that looks at payment platforms, lending platforms. And in there, the system we have built, which is what we are calling as Vuma platform, can do for you savings. We have a product called Weka Weka that you probably are aware about.
Interesting.
We are lending KCB and Pesa, right?
Yeah.
And they're now paying payments as well.
Yeah.
So those three. And then Congo has been another area that we are very keen in going. And Congo's approach for us will be perhaps an investment in that market from where we are going to do. So maybe more of like a merger and acquisition.
Okay.
And because we have been able to deliver NBK, I think we have capabilities to be able to manage that process in the market. So you say, do we get value in the way we invest? I would say it's a mixed bag.
Okay.
In some markets, we have been very successful. So like Tanzania and Rwanda has been very well for ourselves. South Sudan is, I say we had very much success, and we lost all that success. We come back to zero. But I will speak in my last comment to you that if you think about business development in our region and being really catalysts, you have to prepare yourself for upsides and downsides. They believe that enterprise growth is only an upside game. If you don't take risk, naturally we remain smaller. Some players build their business bigger than we are, and then we complain that someone is taking our cake and eating it. The greenback, the dollar today can move from Nairobi today to Dar es Salaam today as we sit. It doesn't wait. And so the reason why Asian businesses, you know, what we call as the Eastern businesses are big in our markets because we would like to take opportunities. Yeah. So for instance, we say we are big. Our asset size is almost $10 billion.
Yeah.
It's less than 1% of the largest bank in China. And scale is important in the game of financial services. If you want to build your railways, do your airports, build schools, have a hydro project funded, you need bigger institutions. Even just this building, you need someone who has the capacity to lend you your $50 million to do the project. And that's what bigger banks will do. Now, we are also refining our strategy. So it's not going in and setting up branches, let's say, in the DRC and trying to learn how to grow somewhere. No. So I would say it's a mixed strategy based on the market. And we also perhaps have become better in the way we assess the risk in those markets. So I give it to you that I want to agree that yes, we have not made all the success. Yeah. People always ask me the questions, why not put the money in Kenya? You have a perfect shop. But greater innovation is not about perfection. Greater opportunity is about getting the real chance to scale a gap that you see in the market. Yeah. That is a success you saw from M-Pesa many years ago, isn't it? And that's what we see today. So if you ask me in the next 5 years, our strategy will be more refined. We'll get a better return of our investment in the 7 countries we are in, including now Ethiopia and the DRC, because we will be in those markets in the next 5 years. And next time you ask me, delivering our ROE for our shareholders and making sure that the commitment for the valuation of the enterprise is delivered is at the heart of our strategy. Okay. And so the answer will be different in the next 5 years. Great.
And I just want to get your parting shot, Joshua. Of course, we did see the demonetization happening. It was concluded. And CBK says 7.4 billion was not returned. Okay. Will this affect the economy in any way? As a seasoned banker, I just now want to get your perspectives as we close.
Well, I mean, first I must say I am very excited about, well, I must congratulate the governor, Dr. Patrick Njoroge, because this is a very few countries globally are bold enough to undertake a demonetization. Forget even about just being successful, just to start. And the way it was executed, working in collaboration with the central bank, is first of a kind on the continent at least. We can revert to India, but our experience is way ahead of what we saw in India 2-3 years ago. So have we been successful? The numbers are out. Most money was exchanged. Now, the 7.3 or so billion which came up, I would say it's not very significant in our economy of almost 100 billion. I think when the new numbers for the economy are unveiled, our economy should have touched $100 billion or 10 trillion. So that for me is an important aspect to be able to say, how do we see? So it shouldn't affect the way we do. And we worked extremely hard with the central bank speaking. So, the people we are worried mostly is people who don't come to the bank. People who keep money. So I always ask for my grandmother, she has this 1,000. Nobody knows where it is. She hasn't told anybody, correct?
Yeah.
And that kind of
And
money.
there are a few cases that came up.
Yeah, but we spoke everywhere. We went on every single station. We spoke in their language. We followed through. 120 days is a long time. Yeah. But for me, I look at it on the opposite side. So you should look at how much has been returned. It's almost a 97% return. And for me, that shows that we've been very successful. I could be worried if more money never came back. And also, there may be people who maybe have traveled with Kenya shillings overseas, like the diaspora. Yeah. Like I remember when I was traveling I was in the US in July, someone gave me old shillings, told me, make sure you go to the bank, correct? Yeah. I was exchanging some dollars. Make sure you go and change them. So I would say that we do not see an impact, even a mild impact.
Okay.
It's also important that we are showcasing that Kenya can go into an exercise to refine, because what is the gap really for this issue is making sure your financial sector is not used for illicit financial flows. Yeah, because it's important to play in the global economy as a financial center. You need to ensure investors that your markets have got genuine flows of cash.
Transparency.
This is how London, New York, Tokyo, Beijing, Johannesburg are built. This is our dream, isn't it? We want to become the epicenter of financial services on the continent outside South Africa. Now, stronger systems, a better transparent money market, illicit flows, knowing your customers, and transparency on transaction settlement is what you look for to build an economy. And that is what I foresee will happen for the Kenyan economy. And I think that as banks and the central bank, we are showcasing that we are clearing the path for our next exponential growth for our economy. So it's kudos to the governor. And I think it would be unfair if we don't take the opportunity. We were talking about the Nairobi International Financial Center.
Yeah.
This is a precursor for enabling us become, what people see Dubai, what people see London, at least for our cluster of countries in the region of 10 countries. And that for me will be my parting shot.
All right. Such a singular honor and pleasure having you on the Trading Bell.
Thank you.
Joshua Oigara.
Thank you, Oigara.
And we should actually write a book. That's a story for another day.
Thank you.
Well, we've been speaking to Joshua Oigara, the Group CEO at KCB, and he's quite optimistic about the takeover of National Bank of Kenya, indicating that the banking system is quite robust and a lot is in the pipeline when it comes to the consolidation agenda for the banking sector. Well, for now, I want to take a look at markets analysis for this week. Well, and with that brings us to the end of the Trading Bell for this week, having a very illuminating discussion with the Group CEO at KCB, Joshua Oigara. Remember, you can always engage with us on our social media platforms appearing at the bottom end of your screen. And let's keep engaging. My name is Abi Agida. Thank you for your valid company. See you next week, same time.